Hello everyone, welcome back to Just Invest Today. In today's video, I'm talking about 4 stocks that I've been buying this week. There's been so much action in the market. The market has been going up, been going down, been trading sideways. Interest rates are rising, inflation is happening. There's so much to talk about in this market. I'm still buying stocks. I'm still trying to find deals in this market, and I found 4 stocks to buy. So wait until the end of the video so you can tell me what you think about these 4 stocks. I want you to tell me, what stocks are you buying in this market? Are you buying? Are you selling? Are you holding on for dear life of the stocks that you already own? Tell me what you're doing in this market. But before we get into this video, like and subscribe to my channel. So the first stock I'm going to be talking about is Activision. So Activision is like a perfect arbitrage play. There is risk to this play right now, but we know that Microsoft is planning to buy the stock for $69 billion. So right now it's trading at around $75, $76. And this is going to be like a 25% run if Microsoft is actually able to buy this stock. But this play is going through a lot of scrutiny right now. We have anti-monopoly in Europe rules coming down on this Activision deal. They're talking about Call of Duty and how it's too much of a monopoly right now. But Microsoft is actually kind of giving away rights or kind of giving away permission to, like, okay, we're not going to just have this monopoly on Call of Duty. So hopefully this deal can go through. In my opinion, I think this deal can go through. And if this deal can go through, that's a 25%, 30% jump right away. So if this happens in April and June, which is coming up very quickly, that's an extra 20-30% right there. So I'm putting like a 1-2% position on this arbitrage play. There is a lot of downside risk with this play because we know the European Union, USA, they all do not want all of these companies just acquiring different companies, getting these monopolies. So they just don't want that. So there is risk that this deal does not go through. But even if this deal does not go through, Activision is a still pretty solid company. They're generating $2 billion of cash flow. They're still growing their business. They have great IPs. Like, they have amazing games like Call of Duty, like Diablo. And they have a good balance sheet with like $12+ billion of cash. Plus, if the deal doesn't go through, they get more cash for the deal closing off. So that's a plus. So I still think that even if you lose on this arbitrage play, the company can kind of still get back to $70, $75. So that's my opinion. Tell me what you think about that first stock. Next stock I'm buying is Berkshire Hathaway. I think Berkshire Hathaway at $304 is a steal right now. People say the intrinsic value is around 386 plus. You have Christopher Bloomstrand saying the same thing, that this is worth a lot more. And even in my opinion, you're getting a company that has $150 billion in cash. You have all of the equity investments like Apple, like Coca-Cola, like American Express. That's amazing right there. So they have a $309 to $310 billion equity portfolio, and I think that's only going to go up into the future because they're getting into the Oxys, the Chevrons, and I think oil is going to do really good into the future, maybe in the next 2-3 years. Then they have the full-owned companies like BNSF, like Berkshire Hathaway Energy, Geico, Clayton Homes. They have so many operations just working under Berkshire, and you got Charlie Munger and Warren Buffett as your capital allocators in this amazing time. Come on, like, what are you saying? Like, this is an amazing play. I'm just literally stocking my cash in Berkshire Hathaway. If I have extra cash, I'm just buying Berkshire Hathaway stock. So if I see a better opportunity than Berkshire, I'll take it out and buy another stock. If not, I'm happy to own Berkshire because I know the stock won't go too sour. And if it does go too sour, I don't care because the intrinsic value is way higher than it is right now. So I just think if you count the cash on the balance sheet, the equity holdings, the solely owned companies that they have, then the interest they're getting on the cash right now, the capital allocators, I just honestly think it's an amazing play right now to hold for the long term and even the medium, short term, whatever you want. So Berkshire Hathaway is the second stock that I bought this month. So the third stock that I bought was Whitecap Resources. This is a natural gas company based in Calgary. It has a lot of natural gas properties and assets. It has a 5.4% dividend. It's trading at a 3.4 PE right now, which is pretty solid. They just made an acquisition of XTO Energy, which is actually going to help them produce more barrels. They're producing about $1.1 billion of cash flow, which is insane. So if they're trading at such a good multiple, producing $1.1 billion of cash, and they are telling you that they're paying out 75% of the cash flow. So that's just amazing. So they're paying out around $800 million. If it's going to be through dividends, it's going to be through buybacks. Even if it's a special dividend, they want to give all that money back to shareholders. They're going to reduce their debt to $1.3 billion. And that's when they're going to really start planning all these buybacks, all these dividends. They've been increasing their dividends quarter after quarter, which is really good. So that is my quick energy play. I can kind of see this going up to even like $15-16. Plus with this dividend, I'm willing to hold. The caveat with this oil company is all based on what oil does. So we need oil to trade around $70 to like $80. If it goes higher, the stock's gonna even boom even faster. But if it goes lower, like $60-50, maybe this company might be in more risk. Even though they've been paying down debt and trying to reassure us with kind of making sure that they have free cash flow generation and cash on the balance sheet, it's still a big worry if oil prices go down to like lower amounts and not stay at this $70 to like $80 range. So that's a big risk. So for the last stock that I decided to buy this week is Paramount Global. We know that Warren Buffett has been buying it, or Ted or Todd, and they own around 15% of the company. So that's a strong reason why I got into this position. It's more of a clone. Paramount Global has a lot going for it as well. It's selling at around $14 billion market cap, around $21 to $22. Viacom CBS is a leading global media and entertainment company that creates premium content and experience for audiences worldwide. My main thesis for this whole company is their direct-to-consumer right now. Paramount Plus, Showtime, they're actually combining both of those companies, putting it together. That's actually going to produce a lot of cost efficiencies going forward, as the CEO said. Plus, they have a deal with Walmart Plus that is generating a lot of customers to their product. They're getting 30% revenue growth in this direct-to-consumer. We know that CBS is going downhill, but that's still producing cash for the company, and they have a potential for a buyout. So if someone bought them out, it'd be around $30 to $40 billion. We just recently had someone trying to buy Showtime for $3 billion and they denied it. That just shows you what people are willing to buy because they want what Paramount has. Paramount has a long way to go, and they're saying that they're going to produce cash flow in 2024. So we just have to think long term with this play, in my opinion. Management is citing a $5.5 billion run rate going into next year. Paramount Global was noted the number one signups in 2022. The company signed 9.9 million new subscribers, bringing the total to 55 million. They're expected to increase prices to like $11.99. And as I said before, they're planning to produce in 2024 positive free cash flow from the direct to consumer. So that is all positive. But there is a lot of downside because this is more of a turnaround play, as advertisement revenue is going down. What if the operating efficiencies don't play out as the company is saying? So there is a lot of downside, or maybe their expenses go overboard. The content that they produce doesn't do as good. There's still a lot of competition in the streaming field. So there is a lot of risk to this play. Guys, that was my 4 stocks that I'm buying. Tell me what you think about these stocks. Tell me what you're buying down in the comments. Like and subscribe.